Welcome to the mining newsflash with Karora Resources, Discovery Metals, Skeena Resources and Vizsla Resources. Karora Resources presented again very good quarterly and annual figures for their first full year of gold production. Consolidated gold production was 99,249 ounces for 2020 from the Beta Hunt and Higginsville mines in Western Australia. This significantly exceeded the 2020 production guidance of 90,000 to 95,000 ounces. Fourth quarter 2020 production was 25,637 ounces, which represents the strongest production quarter last year and sets a very strong starting position for the new year. Consolidated cash increased to $79.5 million at 31st December 2020, up 18% from over $67 million at 30 September 2020. The company further advanced $2 million into debt repayment. For 2021, Karora plans a consolidated production of 105 to 115,000 ounces gold at average all-in sustaining costs of $985 to $1,085. We think up to 120,000 ounces might be possible, and costs should be on the lower end, leading to even higher margins. Karora is steadily reducing costs and is very efficient. We also like the significantly increased exploration budget from current revenues, which is expected to be 20 million Australian dollars this year. The budget will be used for further resource definition drilling and exploration on all three properties, and very much reflects last year's drilling success, where Karora increased proven and probable reserves by 334% to 1.33 million ounces of gold and measured and indicated resources by 167% to over 2.5 million ounces. Gold grades are expected to increase during the year as higher grade areas are advanced at Higginsville Central. Add to that the expected production ramp up from the high-grade Spargos project in the second quarter. These are great numbers, and we see significant upside potential to an initial $5 Canadian price target for the stock. Discovery Metals is planning an extensive work program and budget of 26 million Canadian dollars for this year's work program at their flagship project Cordero in Mexico. 2021 is expected to be a transformational year to fully establish Cordero as one of the few large silver projects in the world in terms of size, margin and scalability. The focus is to further mitigate risk by preparing a technically and economically robust preliminary study, a so-called PEA, and, of course, to continue to grow the resources by expanding known zones and new discoveries. A total of 66,000 meters of drilling is planned. Furthermore, a social baseline assessment is to be made in the project development in 2021, and the environmental baseline study is to be advanced. With $82 million in cash, the company is well equipped and we expect lots of good news. The base case mine plan in the PEA will be based on a conservative silver price and will include incremental expansions in the throughput rate of the proposed processing plant. The plan will prioritize higher grades early in the mine life to accelerate the payback, which we really like. The study will be based on the updated resource model and all metallurgical test work and is expected to be completed in Q4 2021. To demonstrate the scalability of Cordero, they will also include a blue sky alternative as an addendum to study the impact of higher silver prices on project throughput and optimization. Skeena Resources intersected a thick 9.12 grams gold per ton gold equivalent interval over 49.6 meters within the 21C zone development buffer on SK Creek. The company just announced another set of great drill results that underscore the quality and size of the project. The Phase 2 infill drilling program focused on converting resource categories for the pre-feasibility study, the PFS, to open pit constrained resources is now complete. 6 drill rigs are active on the project, conducting exploration work in the vicinity of the mine. Skeena is progressing with great strides towards a production decision. The pointed figure chart excites us a lot. The share price has fully broken out from the resistance at 2.50 Canadian dollars and has risen quickly as expected. We watch 2 buy signals, which you see in the blue circle at once. The first price target is now at $4.75 Canadian cents. In the longer term, we see the old high from 2011 with around $7 Canadian as a price target. Vista Resources showed more great drill results from 10 new holes on the Napoleon prospect at the Panuco silver-gold project in Mexico. These results expand the discovery and it remains open to the north and below wide intercepts at depths. Hole NP2042 returned 422 grams silver equivalent per ton over 11 meters true widths at 149 meters depths. Hole NP31 returned 569 grams silver equivalent over 3.5 meters true widths at only 47 meters depths, and NP2013 returned 561 grams silver equivalent over more than 3 meters true widths at 130 meters depths. Vista continues to expand the area of mineralization at Napoleon in all directions with the drilling. Fantastic are the white zones to remain open in the deepest drilling. The larger Napoleon corridor has significant potential and the goal is to expand both the Napoleon and Papaya zones. Additional drill rigs will be deployed to systematically explore the entire 2.7 kilometer vein corridor. We see the company as a future silver-gold but also base metal producer and can envision Vista starting production already next year. My team and or myself are or may be shareholders in the companies presented, and they are or may become part of the SRC Mining Special Situations Certificate. Thanks for watching us and bye-bye from Switzerland.